Okay, and welcome back, students who are taking financial accounting. And we're in this series of videos, we're working on the Chapter 3 problems, the Group B problems that were assigned in the digital study guide. And this one here, I'm going to dispense with telling you to watch the theory videos for the simple reason that we're working on 3-52, which basically is, it says here, the adjusted trial balance as follows. And then we're going to prepare the income statement, statement of retained earnings, and the balance sheet. Okay, um, and uh, because of this, I mean, uh, actually, I wouldn't even be doing this problem. I mean, you do the problem for the practice, but I'm not going to go through a lot of the theory on this. If you want to, if you're not sure about creating an income statement, statement of retained earnings, and the balance sheet, I'm going to refer you back to the Chapter 2 theory videos, or like, for example, problem 2-41B. In Chapter 2, we basically, a lot of the problems were taking a trial balance and then creating your financial statements. All right, so this here is just kind of, repetitive along that line. So I'm not going to get into, a lot of the detail here. I'm just going to actually, what I'm going to do is I'm going to refer you to the um, the solutions, and I'm going to, what you're looking at in the solutions, I'm not going to disagree with in any way, shape, or form. However, I will point out that, along the way, like, for example, I'm not going to create the headings. I'm not going to be that particularly interested in the format, indentations, in the columns, things like this. I'll just quickly kind of sketch out a skeleton of the financial statements, because again, this here was all covered in Chapter 2, right? Uh, so with that, I'm going to just say, okay, let's get on with this. And if you don't understand what's going on, then I suggest you go back and you restudy Chapter 2 and watch the, work through the exercises and the problems for Chapter 2, because we did a lot of financial statements in that chapter. Okay, it says here, for the year end March 31st, and then 2 is which financial statements reports results of operations, which were they successful, which statements reports the financial position. So after I create the financial statements, I will come back and answer, respond to 2A and 2B. So let's get on with it. All right, so we're going to create an income statement, and I'm not going to go bouncing back and forth between screens here to look at the adjusted trial balance. I mean, it is in your book, so I'm going to be looking at that in my book, and I will just be transferring information. So I'm, look back and forth there. I'm just going to write on the screen. So we'll do the income statement first, and remember, just follow the order that I do things in, because remember, in Chapter 2 I said it's a process. You have this general idea as to how you go about doing things. There is a difference on this income statement in the revenue section versus what was shown in the in Chapter 2. However, when you're watching the videos, I explained this difference, because we're working with a multi-step, and in Chapter 2 we only had one revenue account. I explained what happens when you have more than one revenue account, and this particular problem has more than one. So, I will present that, but realize that the understanding came from Chapter 2. Of course, the heading, we put the heading, we center align it, we put the title of the company, income statement, and then, we have to make the correct date. So it's year ending March 31st, 2014. Right, so then, that's the first thing I do is I write the heading. Then the second thing I do is I put revenues. And then I put expenses. And so I'm not going to worry about the numbers right now. I'm only more interested in creating the structure of the financial statement. So under revenues, I have, and I'm going to indent here, service revenue and interest revenue, which then gives me a total revenue. Okay. Now, for the revenues, notice that I'm going to have a mathematical calculation right here. I'm going to add up the two in order to get a total, right? And so whenever I'm doing a mathematical calculation, I have basically I have columns across the page. Whenever I'm going to have a mathematical calculation, I move one column to the left, I do the math here, and then I put the answer in the right-hand column, okay? So when you were looking at the Chapter 2 videos, all they had was just one revenue account, so we didn't have a total revenue. And if you only had one revenue account, you would just put the amount in the right-hand column because it made no sense to add one number. You're adding it to what? Nothing, okay? So you just put the one number in the right-hand column. But here, this is different in that we actually have two numbers. So we move one column to the left, and we have 88,000. And since it's the first number in that column, we put a $sign. And then we have 960 for the interest revenue. An underline shows the mathematical calculation, and we put the total in the right-hand column, which is 88,960. Now, it is important that you write total revenue, okay? Because if you don't write total revenue, you never have a number without a description. Okay, if there's no description, you don't know what that number is for. And these are just generally accepted accounting practices. And even though you may, kind of like, oh yeah, I know what that is. Well, yeah, you do, and yeah, other people do, but it's not professional. Okay, and remember, people are making decisions off of what's on the page. So if there's any ambiguity, if there's any doubt in their mind as to what it is because you don't have a description there, you open yourself up to legal liability. So that's why you have, descriptions and things like that. Okay, and then we're going to do the same thing for the expenses. Expenser. And we have salary expense, we're indenting. And you do write out the words expense whenever you're doing this. And of course, I'm abbreviating. So rent expense, depreciation, equipment, depreciation expense, equipment, utilities expense, and interest expense, and supplies expense, which then gives me a total expense. And again, since we're doing a mathematical calculation, we're adding all of those up. We go one column to the left and we put in the numbers. So I have 43,000, 14,000, 4,200, 2,800, 600, and 300. And of course, a mathematical calculation means I underline, shows the math, and I put the total in the right-hand column. So that's going to be 64,900. And now, since we want to know what our revenues less expenses, and notice that there's my revenue, which is a total amount, and there's my expenses, which is a total amount. So revenues less expenses, when you're looking down the column, it becomes relatively easy to understand. I can look and say, oh, 64,000 for my expenses. I don't have to be looking at through all of these numbers and trying to figure it out. And that's why we do the multi-step formatting. Okay, multi-step meaning more than one column. All right. Single step is when everything would be in just one column. But if you can imagine pushing all of these numbers to the right here, okay, then what happens is it makes it a lot more difficult to read and understand. So that's why we use multi-step formatting. And since our revenues are greater than our expenses, we have a net income. Remember, you can't just write the number there, okay? You need the description, whether it's a net income or a net loss. And since those two numbers get added together, there's an underline to show the calculation, double underline to show that's the end of the calculation, and a dollar sign to show that it's a dollar amount and not a decimal. Okay, so that's the income statement, and that 24,060 is going to transfer over to our statement of retained earnings. So again, the heading, and we use the name of the company, the title of the statement, which would be statement of retained earnings, and of course we need the correct heading date. And the statement of retained earnings has the same heading as the income statement. Okay, and of course it's center aligned. Now with the statement of retained earnings, generally this is single step. We're going to go in only one column, not two columns, not multi-step. All right, and the reason why is because there's basically these, at this moment in time when we're dealing with financial accounting, intermediate accounting, which is advanced accounting, which a lot of business managers and marketing people, they're not going to be concerned with that. Human resources, you're not going to be concerned with intermediate accounting. So right now you really only have these five different line items. Okay, realize that if you are taking accounting, that the statement of retained earnings is not always going to look like this. But for right now, for everybody's where we're at in your education, we have five line items. So we start out with a beginning retained earnings. I like to write the word beginning, okay, even though they don't have, the solution doesn't show the beginning or the ending. I like writing that in. Either way is fine. All right. April 1, 2014. And the reason why I write beginning is because it kind of gives you the hint that, yeah, this here is the date for the beginning of the accounting period, which I'm sorry, not 2014, 2013, because this is for an entire year ending, right? Okay, so the year ends on March 31st, so the next day, which is April 1st, is the beginning of the period, and that was 1 year ago, which is 2013. So I write in that description, then I add my net, in this case here, net income, and then I have a subtotal, and then I have less any dividends. And let's just say your dividends were 0, okay? Would you put in less dividends and then show 0 over here? Yes, okay? And then I have ending retained earnings, which is our March 31st, 2014 date. Okay, so one column for dollar sign for the first number. Our beginning retained earnings was 10,900. Right. And let me just quickly look at that problem real quick. I am looking in the book, looking in the book. So if you look at the adjusted trial balance, and I'll just jump up here. Okay, for that beginning retained earnings, there's the $10,900. Okay, because remember, this is an adjusted trial balance. It's not, so that retained earnings amount is what it was at the beginning of the accounting period. Sure, we've made adjustments, but you shouldn't be making any adjustments to the retained earnings, and we have not made closing entries. So, we haven't moved our revenue or expenses or dividend amounts into that retained earnings account. So whatever that balance is our beginning balance. Okay, so then we're going to add in our net income of 24,060 from our income statement here. And that's a mathematical calculation. So our subtotal is 34,960. and then we're going to less dividends of 19,000. Remember, that came off of our adjusted trial balance there, and that's a mathematical calculation which gives us 15,960, double underline, and of course a dollar sign, and that's our statement of retained earnings. So if that's our ending balance in our retained earnings, now when we go to create the balance sheet, we're going to use this ending retained earnings amount on our balance sheet. And notice we haven't made closing entries yet, so our books still look like this. Okay, I mean, they have these balances in it. It still has the retained earnings here, the dividends, our revenues and expense amounts. Okay, but we're able to create the balance sheet from our two previous statements, our income statement and our statement of retained earnings, even though we have not done anything with our books just yet, right? So for our balance sheet, of course, the name balance sheet, and remember the date, the heading date is, and I like to write as of March 31st, 2014, but if all you did was just write the date, that's fine. I like writing as of because of the connotation, right? So then I put in assets, and then I have my liabilities here, and I have my equity here. And I'm just abbreviating, I'm not writing out stockholders' equity. Okay, so then we end up listing our accounts, cash, accounts receivable, prepaid, rent, supplies, equipment, less accumulated depreciation equipment. Okay, writing the word less means that we're going to have a deduction here, and of course it's accumulated depreciation, and you have to, the general ledger account name is accumulated depreciation dash equipment. You can't just have accumulated depreciation, because if you have, let's say you had also furniture, right, and you had an accumulated depreciation account there, and you didn't segregate it by saying equipment or furniture, right? If you didn't do that, you wouldn't know what account to be using, what account you're referring to when you're actually making your adjusting entries. So you have to use the asset's name as part of the accumulated depreciation description. Okay. Now, I'm going to wrap this around to the other line, just like it is in the book, UIP. But I'm going to somewhat disagree with the way that number is presented, but we'll get to that in just a second. So I have 10,200 for the cash, and of course a dollar sign because it's the first number. 11,600, 1,000, 1,300 for supplies. Okay, now when it comes to equipment, okay, notice that we have a mathematical calculation because we have equipment less the accumulated depreciation. When we first purchase the equipment, we buy it for a specific amount, but then we depreciate it over time. So the book value keeps on going down and down and down. So we have to do the math between what we book it for originally less the depreciation. So we're going to have a mathematical calculation, and we need to move the numbers to the, move to the left one column. And notice I put a dollar sign, but the solution didn't. You should have a dollar sign. And notice that the solution has a negative 12,000, meaning it shows the brackets. Okay. Well, if you go back to my theory videos in chapter 2, you'll or working on the problems, you'll see why I explain that when you write the word less and you use the brackets, that what actually that means is adding. Okay, you use the descriptor less all the time, but we try to work with positive numbers as much as possible on our financial statement. So that's why we don't write 12,000, negative 12,000 here, because a less times a less means a positive. I mean, a less times a plus means a negative, and you're subtracting. So write the word less and then write $12,000, but do not use the brackets. And the net effect between those two is $34,000. So that goes in the right-hand column. Now, notice that it isn't on a separate line by itself. Okay, if you're looking at the solution, it's right across from the 12,000. Right? You don't put a number on a line without a description. Okay, and it kind of like makes no sense to put, a net book value of equipment and then have the 34,000. Having the equipment and less accumulated depreciation and putting the 34,000 on the same line as the 12,000. The generally accepted accounting principles, we know that that's the book value for our equipment because we have the description as the equipment. And if you have additional assets, like let's say you had furniture and less accum depreciation furniture, okay, and let's just say the furniture is 1,000 and the depreciation is 400. Okay, well, that would go here. Okay, so now we know that this 600 is, the net book value of the furniture. Okay, and for every asset that you have, you're going to have the depreciation, and you just keep on going down the page. If I had automobile, right, I do the same thing. Less, right, automobile, less accumulated depreciation, auto, right, and let's say that's 48,000, and I'm down, say, 12,000, let's say 18,000. So now I'm at, I have an underline and I have 30,000, and you just keep going down. So when you're looking at this column and you're going to add up your total assets, okay, we have an underline here, which, now we're adding everything in this column up in order to get our total assets here. Okay, so I hope you understood that. I mean, I deviated just slightly, but I do know that students, when they try to quote unquote copy out of the book, they'll come and they'll see just the one asset here, and if they have different other assets, they have a tendency to go, well, I don't know what to do with it. Okay, well, now you know what to do with it. They follow the same principles. All right, so that's all the assets we have, and so we draw an underline because we're going to do a mathematical calculation, and then we have our description, total assets, and we're adding up all of those numbers, which gives us 58,100, and that gets a double underline. Now, over to our liabilities. Okay, so we have accounts payable, unearned service revenue, interest payable. Well, actually, let me do interest payable, and then I'm going to go salaries payable. I'm just doing this to save time, and then notes payable, and then I have a total liabilities. Okay, these I could put in the right-hand column, right? Because if I'm reading down, I mean, I could theoretically put it in this column and put the total in this column. Okay, the solution has it in one column. All right, I'm going to do it by actually putting them in the left-hand column. So I have 3,300, 1,800, down a little bit better, 1,800, 540, 1,500, and 9,000. and I'm going to have an underline because it's a total, and then I'm going to put the total amount. Of course, first number is a dollar sign, so 16,140. Okay, so is what's in the solution wrong? No. Okay, but generally, you know, as how can I put this? I'm showing you the slightly different way by using the multi-step in two different columns, and personally, I just don't agree with the way the authors are doing it. But then again, if you don't understand how they textbooks get written, okay, um, and even though it's correct, technically it's correct, and you can look at it and understand the solution, that financial statement. Um, you know, most accounts will end up, getting accustomed to doing it, a certain way, and use that way throughout everything. I mean, is it possible to do everything in single step? Yes, it is. Okay, but it just makes things a lot more difficult to read. And if you ever look at annual reports, you'll never see them in single step. Okay, so um, but remember, annual reports are generally they're for publicly traded companies, and which a lot of information, a lot of stuff is summarized, and that all goes towards being an accountant. Okay, whereas like I said, a lot of people taking financial accounting are business managers in business management, marketing, things like that. So is it absolutely necessary you do it the way I'm doing it? No. Um, is it necessary to do it the way that you see the solution? Yes, you can. If you did it my way, is it going to get marked wrong? No. All right, because we're accountants and we understand that there's certain leeways in certain things as long as they follow the generally accepted accounting principles. Okay. All right. So for equity, we have common stock, retained earnings, and then we have total stockholders' equity. Right. And again, I would be using multi-step. So it's 26,000 and 15,960. And that puts my equity in the right-hand column of 41,960. So that when I'm looking down this column, I know that liabilities plus equity gives me my total liabilities plus equity. Okay, and that would get a dollar sign, and that should be 58,100, and I get a double underline there. So that's how I'm creating that balance sheet. Okay. All right. Now I know I've given a lot of information there. Um, and again, go back and watch the 30 videos for chapter 2. And also problem exercise. Let me see here. It was, I had booked, what one was it in the, oh boy, think it was problem 2-41, I believe it was. 2, I had written here 2-41B. Okay, so go back and watch those videos as far as formatting is concerned. Okay, formatting is important, and you will lose points if your formatting isn't correct. And even though you may have choices to make, you can either, like I said, do it the way I showed it or do it the way the solution is. Either way is correct, and you'll get it correct. However, if you do something that's blatantly wrong, okay, well then, yeah, you'll lose points for that. All right. So 2A, which financial statement reports Ocean Realities results of operations? Okay. Were operations successful? Cite specifics from the financial statements to support your solution. Okay. The result of your operations comes from your income statement. Okay, because it's your revenues less expenses. Now, the solution says it was moderately successful because they earned 24,060. All right. Now, I would call it successful because they did earn, they did have a net income. Okay. Meaning they had more revenues less than expenses. However, it says the solution says it's moderately successful, and I have to disagree with that, in that you don't know whether it was moderately successful or not because you don't have anything to compare it against. Okay, you don't know if their normal net income is 5,000 a month, or maybe it's 45,000 a month. Well, I mean, if it's 45,000 a month and now it's only 24,000, I wouldn't call that moderately successful. Okay, so they're saying it's moderately successful, but like I said, I can't agree with that because we don't have anything to compare this 24,000 to, right? And B says which statements report the company's financial position. Well, that's the purpose of the balance sheet, is to record the financial position of the company. Okay, so with that said, that's it for this problem, and we only have one more left, 53, and I will see you in the next video for that one.